Good afternoon, everyone. This is Henry, and as we get into tonight's video newsletter, I want to take a look at a few symbols, but kicking things off here with Honeywell and a pattern that, for the most part, I believe to still be bullish, right? When we look at it in its relationship to its broad moving averages, we're still bullish. We did slip below the 21 EMA here a little bit, but the thing that I want to draw your attention to in Honeywell is that there is absolutely some very real resistance right here at 236.86. Now, where does that particular price point come from? It's here against the previous annual swing high. So when we look at 2021, that best price traded was 236.86. And I think there's a very real nuance in understanding the difference in a new lifetime high that was made just right here, just about a month ago, versus the swing high that was made several years ago. That is to say that piercing up through here and pulling back on this daily time frame, I think is very typical. But as long as this pullback, whatever it ends up looking like, doesn't get too much more radical than this pullback, well then I think we can look at this daily pattern in a form of a high and a low, and then a higher high and a higher low. And wherever this happens to come in, it's a spot where you're looking for the opportunity to buy and move that into something like 250. Now, I also think that there's a very real piece of analysis that is moments in time, which is to say, as we get into this window, and this may be a little early to be looking at this, I am primarily because of the squeeze. But just remember that as you get closer to earnings, a lot of times names like this in favorable technical patterns can be looking for something to buy. Or if you can pick it up kind of cheap here in the next week or two, I think in 4 to 6 weeks, you will be glad that you did. So obviously a big correction in the market today. A lot of these names have come in off of that, but I don't think it damages them long term. I want to show you another chart, ISRG, that I think is similar. So coming in here today, trading down some 3.5%, but a similar situation. And I want to show you this one because of this squeeze. You know, I always think it's so easy to do these reviews and show you, all right, the squeeze is my foundation, and here's a squeeze that when it fired, in this case long, you had a massive move up and pretty solid continuation. But that doesn't do enough justice to days like this, to days like, in this case, what you saw right before earnings, right? You're bullish and you go through that, that's not an enjoyable experience. But I believe the art of trading is working to differentiate the noise from the signal, and all of this was noise where this was the signal. So I show that to you in a similar light to Honeywell to say that this could trade lower for a little while. It could come in and there could be some more significant dips. But as we looked at this for a maybe 2 to 3 month outlook for even a run into earnings, I think dips in this vicinity are things you're wanting to buy. And those are a couple pieces of analysis that I'm going to carry into tomorrow. So those are more swing-based views, something that hopefully we'll find some discounts in after today's selling. In the member video, we're going to drop down into our plan for the witching expiration and then carry all of this into next week. So I hope you find the review helpful. Have a great night. We'll see you in the room tomorrow. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful. And if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.